But, really we want to be absolutely skilled at entering at the end of a correction, exiting at the end of a trend, and not confuse our minds with, well, now I'm gonna sort of like do something different.
You've been working at this for quite a while, and how long have you been involved in trading?
So when I went out to Australia, which was the end of start of 2011, and I basically stopped my full-time role, I guess, in the business, because we couldn't justify keeping me on the payroll and being out in Australia. So I did a sort of more like a freelance role for the business, which didn't require all my time. And so that was when I suddenly thought, I can't remember what the trigger was, but I'd always been, interested in it. And a friend had given me like a magazine, and it was like gold price set to soar or something like that, and it was like Money Week. I don't know if you know that magazine. And
oh yeah,
I kind of had subscribed to it because I quite enjoyed its style. It's kind of light but informative. And so suddenly I was like, maybe I should trade some gold or something, and so I literally just signed up to a platform and just started trading. It's just I think I would probably do it differently, definitely. But actually, in a bizarre way, the biggest, probably not the biggest, but certainly the risk reward ratio I achieved on probably my, within the first one of my early sales was so huge. And I just thought, this is easy. I got into the Dow Jones short, and I kind of was following a tram line thing, and I just went in and out, and I always had stops, and, and it was basically trending down, and I just went without really realizing what kind of position I'd managed to build up. And I'd never really risked more than like 10 pips or something. To this day, I don't know actually how I managed to do it, but I think I just caught the Dow falling. It was like, it was that October 12. I think it was October in 2011 when the markets fell. And literally I was like suddenly like £3,000 up from like £100 account. And, of course I lost it all, all kind of and look back, it made a nice little Elliott wave, 5 waves down, and then kind of retraced back up, and that was me kind of break even. So it's like, but that's how I got in. I just dived in, and then I went through different platforms, because I realized that, some of them were really hard to use, like the drawing tools were so antiquated. And in fact, the one I first went on, I think went into liquidation. I can't even remember the name of it. But then I came across your course, and at the end, so I traded essentially for, I think, a year. But without any instruction.
But it wasn't Forex, or part of it was Forex?
It was part of it was Forex. It was like the indices, gold, and Forex. Yeah. And then I was just Googling for information, and I came across your site.
So before 2011, you had not really had any involvement with trading?
No.
Even though you worked for like the Queen's broker or something, that whatever that was, It wasn't really trading.
Yeah, I'd had a lot of exposure to, because I was an accountant by training, and then so I'd worked in the merchant banks where, we were responsible for checking that they were all in order, and so I'd definitely been exposed to all the treasury departments, and I ended up working for a stockbroker, but not in the money markets, not in that whole world of trading. I'd seen trading rooms, and I'd always been intrigued. I think at the time my job was to go and tick off these trade tickets to make sure that, this is in the old days, people would write them down and they get like put in the system. And, people the auditors needed to prove this audit trail was all, correct, and that no, there's no skullduggery going on. And so, yeah, I kind of remember peering into these trading rooms in London and just going, wow, that looks like exciting, but I was just an annoying auditor who who basically had to tick things off. It was, in some ways, it was amazing, but it was also quite confronting, realizing that you are not part of that world at all. And I did nearly leave that job, and I did apply, and I got accepted to go into a program. It was like a trading program with Manufacturers Bank Hanover, and but I couldn't go to the interview on the day that I'd got because I had these exams, these accounting exams, and I just thought, it's too risky to not do this. And so I wrote to them and said, any chance, and I can't come in on that day. Can I come in on another day? And they just canned me off the program like straight away. There's forget it, mate. Just no sympathy, no kind of grace. It's just if you're not 100% into this, just get lost, So that was back in the 90s,
Oh yeah. I just was thinking you had a background as an accountant and as a not a software developer, but a consultant or something in that business. A lot of
I was in accounting in the city, and then I left and got into software again because I realized that the city was, it was a bit boring, really, especially the side of I was involved in, and even corporate finance was boring. And I got back into, I'd always been involved with technology, so I got involved with a software consultancy, and then that just for the next pretty much 20 years, I guess, 15, 20 years, and then we set up our own business and grew it and finally sold it, and that was end of 2017, even though I'd not been that involved with that for the final 5 years, but that just dominated my life really for 15 years, growing a software consultancy.
Wow.
And it was only when I came out the other side, I was like, okay, wow, maybe I'll look at this trading thing.
Now that you sold that business, do you feel like you're pretty well established in trading as a business, or you have a few more years to work on it?
I'm only really now, even though, so in the run up to, for the last, I guess from 2012, when I was in Australia, I was working with a business, which was giving me a consultancy income, which was great. And that was allowing us to go back and forth around the world. I think, I was, 1 minute I was in Australia, then the UK.
You're going to New Zealand and back to.
Yeah, it was great. It allowed us to have our kids in New Zealand, where Liv's family's from. But the company I was working for didn't have huge, amount of cash flow, and it always felt like we never really, whilst my work was regular, the actual payment was not, and whilst I knew that they would never, the only reason he would not pay me is if he went out of business. He wasn't going to sort of, he was an honourable guy, but the business was tough,
Oh, yeah.
And so you know what it's like. You're kind of you've got that financial insecurity, and then you're trying to trade.
Oh yeah,
and that can be a bad combination, or it requires a real strong mindset to not let it influence your trading results. And I think, for a lot of people that get into trading, they are, they're not necessarily in maybe the best place financially, or, and people do it really tough ways. They're working jobs, and they're obviously trying to do it to get more money or find a different career because they're just working hard and don't feel that they're putting enough away. So I think invariably people come into trading with sometimes some financial insecurity baggage. And I think it's really important.
I think it really goes against the whole natural human brain function. And there's a book about that, but just the survival instinct kicks in, and then it becomes harder and harder to trade, and then you're working against yourself.
Yeah. It's definitely a challenge. And then we kind of had that for a long time, really. And then obviously selling the business removed that in some ways. I think now I'm in that, it's for the first time in 5 years, I feel sort of financially secure enough to trade. I have the time and, an emotional stability in the sense of you're not having to deal with too many other challenges, basically. To really focus on it. So it's only really now that I'm going, okay, this is the plan. This is what we're doing, and that's 6 years in,
It's really not that long in the big scheme of things to put in 6 years and work on it.
Yeah. I think it's just something that is with trading, is that the journey it never really ends, but even getting yourself obviously sort of sufficiently knowledgeable and skilled and experienced in trading is just one small part of it, and then basically making sure you can deal with it emotionally, and that's an ongoing thing as well. But I do other sort of financial. I got meditations that I listen to Esther Hicks and stuff.
Oh yeah,
I find quite amazing. But I do think I've always been interested in NLP, and apart from reading a book on it, that's it. I haven't done any further work, and it was something that I thought now I've got more time, it would be great to actually do a course on it. But invariably, when you just Google,
are you in the London area?
Yeah, I'm an hour from London, so
there's so many. Excellent experts, but if you find someone and you kind of search around and just see, do they seem like you have some kind of rapport with them, and what's their background? Because you have to shop around and find some people are really good and some people are kind of useless. But if you find someone and you go see them in person and just say, yeah, here's what I'm looking to do, and then they may start somewhere where you wouldn't even expect to need any help with, and then from there they will dig in until they get to the root of the problem. And if you go several times, you will probably eliminate your blockages.
I definitely think that's something I should do. And I mean, whenever I've Googled NLP, up come a zillion different things, because there's so many, resources there that it's kind of difficult to know where to start sometimes. But I think, it's good to sort of get your input on the fact that like London just has so many options, and it literally is just a 45-minute train journey away, so it's right on our doorstep.
Yeah, and I don't have access to that here at all. But there was one lady that does hypnosis, but it's so far away from me, and she was really good and trained by a place in the U.S. that's well known. But otherwise, there's almost nothing here. So I have to work by myself and listen to courses and read books and do the practices on myself. You can't really do it on yourself as well as you can with somebody.
No, I listened to your, you had some hypnosis videos that you put up, and in fact, it was at the time that I was doing the John Azaraf one, and but I listened to a couple of yours, and I actually thought they were more powerful, actually, Scott. Certainly in terms of taking you into a hypnosis state. But I thought, well, I'll come back to these because I've kind of got this subscription running with John, so I'll basically whereas yours are on the side. And again, I need to revisit those because I thought they were great and obviously tailored to trader,
Your development as a trader seems like it has just continued to spiral upward and upward in the last few years. And seems like you're starting to arrive at that point where it's just going to keep getting better.
I feel like I'm on the right path, and I realize that it is a long journey. I mean, when I started trading, I'm not trading for income, and I think that's another psychological level that one has to get across. At the moment, I'm trading my pension fund, so that it's good that you're not having to survive on it. You're not, it's in a way it's just theoretical money in some ways. I mean, it's obviously real money, but you're not actually allowed to withdraw anything from it, without obviously upsetting the whole pension tax status. So, it's quite good. I think it takes the pressure off, but I have had to get used to obviously bigger numbers, and that's the other thing is that one could be trading £1,000 account, and then you move up to a £50,000 account, and the percentages might be exactly the same, but the numbers are bigger, and your whole emotional reactions are different. And I've stepped up through that slowly, and I feel like I've got used to that. I've not just got used to the bigger numbers, but I've got used to the fact that stepping up through bigger numbers as well, and not letting that kind of upset the balance. So I think if I wanted to double it again, I could without suddenly sort of spinning me out. So when I started, I'd got only a part of my pension fund that I was able to trade. And then I kind of gradually have kind of pulled more into it so that I was able to, have obviously bigger pot to trade with. So yeah, and then I've grown it, which is good. But yeah, I mean, one of the challenges I face with it now is that they changed all the rules here in Europe. So margin, it's I think you only get 30-1 margin, and you can only trade half your account. So really, it's like 15-1 margin. And that's a bit annoying. I mean, at the moment it's okay because, even for me to be completely margined out, that's quite a big position, to have. So I'm kind of comfortable with that, but there'll come a point in time where it's no longer really that, it's not trading efficiently. I'd like to be able to trade slightly bigger. I should be able to trade at bigger positions for the pot, That is, that's the plan, is that I will probably not millions, but certainly a good number, and I can, put it in, for example, FX Open, and where I've managed to get myself classified as a professional investor. So, and that there's like 500-1 leverage, which obviously you completely destroy yourself if you were to trade at that level. But at least I've got the flexibility to trade at the the right the right amount, which on a decent size account, that was really handy. And that's probably the most useful thing that year working in the city has done. That and basically past trading experience showing the volume of trades that are done. They wanted to see X number of trades per quarter, which was different to what another platform said. They wanted to see the trades only counted if they're above one lot. So yeah, I just think they're all applying the rule different ways, but certainly getting.
I don't know how many trades they require, but in a way that doesn't really reflect professionalism based on the quantity of trades necessarily, but
completely. You could have had a whole series of losing trades, and I don't know if they were looking at the results. They just wanted to, I just downloaded the trade log and sent it to them and sent them a link to my LinkedIn profile, and they classified me as a professional. So, that is where I will, but then I don't know how much money one should put into a trading platform. And, obviously you can be quite exposed if they have a financial problem, like who was it? Apari, went pop, didn't they?
You can spread it out and have 2 or 3 of them and be able to trade them simultaneously if you're able to concentrate and enter. You can have several platforms open and just boom, 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 get into all 3 of them.
Yeah, I did have two platforms running, and I found myself being a bit selective about whether one was in one and one was in the other. And then, of course, you're not really achieving, um, well, it's not complete risk diversification, but yeah, I found it difficult to keep track of. I like everything in one place, but the
Yeah,
fact is, I think you can't do that.
the more simplified, the better.
Yeah, yeah, for sure.
Even with the number of currency pairs we have to sometimes simplify it down so we're more focused.
Yeah, I mean, I've also found moving to trader views being, I don't know whether it's doing my trading any good or not. I think it's certainly made me realize that actually having a different view, you just look at the charts in a slightly different way. I've been so used to MetaTrader, and suddenly I'm looking at Trader View, and now if I go back and open MetaTrader, I instantly have a slightly different feel of it. And I'm like, okay, that's interesting. Maybe I should, as a practice, have both platforms open purely just so that you've just constantly got that, diversification going on.
Yeah, we can only really focus on one thing at a time. But if you develop a practice of let's just relax. Now let's look at this. Okay, relax. Now let me look at the MetaTrader and compare that back and forth, and then because there are some definite benefits to using that trading view. As you can see, with all those discoveries of indexes and stuff that we didn't even know about before, that really opens things up.
Yeah, I mean, that's, even though I think some of them are just the reversal of the US or just the US, but the fact that they take out the illiquid hours just changes the chart completely. You're looking at something on an hourly time frame, and it's only got 8 hours, and then obviously there's lots of gaps and there's lots of spikes, but it actually it kind of shows the charts differently, which is an interesting concept. Although I'm just amazed that they don't include the London hours, which I think is a bit crazy. But it's more just the fact that, wow, don't these look different? And but in some ways they do still reflect the right pattern. And again, I look at them and go, oh, I need to go back to the main chart because I hadn't actually thought that through, and that's what happened with the Swiss index. I was like, I hadn't seen that on the US dollar Swiss, and then suddenly I saw it on the Swiss index.
Yeah.
Okay.
I'm looking at your charts and discovering some things because I'm not really using the trading view yet. I'm thinking about starting to use it, but I was looking at your charts of the Swiss index, and then some days it was the pound index and other things, and we saw things that were just suddenly eye-opening.
Yeah, I think I just think, I think our minds get very used to looking at things in a way that suits its purpose, or and they just, once you kind of had one view of something, it naturally just, everything else is then just supporting it,
Yeah. It's funny that before I never even had the non-weighted US dollar index, and before that I didn't even look at the US dollar index, but now it has become so essential. And even though I don't even trade it, it has just become so essential.
Yeah, completely. I can't imagine entering a dollar pair without knowing where I'm at on that. It's completely. And I'd really like to get indexes that I can trust. And I mean, I'm thinking, obviously you can create them. I know how to create them on TraderView now, but I just don't know what the weightings I should use, to create, for example, a euro index that is actually not just looking like the US dollar, euro USD, which is, I think, what they've done on TraderView. So, just be able to, I mean, it'd be very easy just to do a kind of simple average. I know how to do that. Like, take the pound and the US dollar. And so maybe I should just do those, because I mean, we find that the dollar index is the unweighted is very useful. They don't always need weightings. So I'll do that actually.
Yeah. I was still thinking about that idea of having the weight change from day to day.
Yeah. It's
like this week, that huge move on the Kiwi. Okay, let's
take it out.
Analyze the pound pairs, but remove that pound Kiwi, or remove the Kiwi out of the deal. Just temporarily.
Just be able to flick them on and off and just go, right, well, let's have a look at it with, without those big spikes, because they do change it completely.
As you can see, there's kind of like a continual evolution of the ability to read and study financial markets, and it just keeps getting higher and higher levels of understanding.
Well, that's the other thing I've realized as well, is that every year I look back and I just go, oh my goodness, I can't believe I thought I thought I knew what I was doing a year ago. But that's kind of happening every year. And I'm sure in a year's time, I'm going to look back at this point and go, I wasn't really that, skilled or advanced in trading. And I'm just thinking, is it literally just like, is there a point where you can go, right, I've arrived? And I just think there isn't. No. And in some ways, the knowledge is almost like exponential, in that, it's not like with most things, you consume knowledge and you would like pick up a lot of what you need to know very early on. And, it's like the law of diminishing returns would kind of kick in, and you're like, well, I just don't really think I'm adding much, for the hours spent. But I'm thinking with trading, I find with trading, it's almost the reverse, I'm doing less hours, and yet I'm feeling way more like I'm understanding what's going on, and I think that's just the emotional side of trading starting to accelerate. And maybe that's only really been able to come in once you accept, right, well, I don't really need to look at any more kind of charting tools and indicators, and I've got the pack. You can kind of switch a few out or whatever, but essentially they're all saying the same thing. They're all kind of guiding us on understanding where we are in the roadmap. The skill is how you use that, and how you trade it. Because I mean, that's the other thing. We were talking about this recently with I think we were just around exiting or stop losses. I think the topic was what we were talking about, which I don't trade with stop losses really, because I just found them just to be taking me out of trades, which ultimately I was directionally correct on. I just got my timing wrong. I'd gone in too early. I wasn't completely like just wrong, and so I just stopped using stop losses. And there's a few times where you are wrong. Those are the ones you've got to go, I need to get out of this. manually. Like the average range is not going to go more than 150 pips, and so and you can still put a stop loss in if you're really worried about like like a Swiss peg removal or something like that. You could put a stop in a long way away, well out of the way of the average daily range, so that you're not going to get spiked out. Or you're not. Sorry, you're not going to get spiked out, but ultimately, if it just goes, it will take you out. Although I kind of think anything like that, it's not going to work anyway. It's just going to it's gone. All those guys that got taken out with a Swiss peg, their stops wouldn't have worked. I mean, just just removing the whole stop issue just meant, right, well, now I'm not going to lose trades because of a timing reason. And that's basically 80% or 90% of the reasons why, we could go negative. It's just time, and obviously in trading, timing is critical, but I just, yeah, I think if we can remove trying to get the timing exactly right, that should result in a much higher win-loss ratio. And so that's really what I started doing. And the big thing is you got to make sure that you do get out when, and you don't get your mind doesn't start going, well, I'll just stay in because and that's the danger. And I've done that where you go, okay, well, it's gone against me. And then you look at, and then you go, well, on the next time frame up, I think it's going to turn again, and you stay in, and then you stay in again. And then you're like, and I've had a couple of losses which got out of control, not so far out of control that it, permanently it hit my account, but certainly way too big for the initial position. And actually, all of those, I had an opportunity to exit, and I didn't take it. I knew the trade was wrong. I thought, okay, but I can see it's going to pull back, and I'll get out close to my break even. And it sure enough, it came back, and I could have got it out within 50 pips or 30 pips, or, and then you kind of get into that, like, I don't really want to take a loss. Maybe it's going to just get into break even. Who cares? It's like 50 pips, it doesn't matter. It was like, it's a trade that, you thought there was a big reward. It didn't go quite right, and it's gone against you quite some way. And now it's come back pretty much within break even. Should have got out, and I didn't. And those are the ones that cost me, and they're so annoying, because it's like, well, geez, take those out, the account would be in a way different position,
Yeah. Oh, yeah. And I experienced the same thing, because I got in the habit of not using stop loss for several years. And then normally there's just no problem, but it's that every once in a while we completely misjudge something, what I'm talking about, on a longer time frame, and then you don't realize that it has turned, and then you're on a shorter time frame looking for an end of a correction. It's not a correction. It keeps going, and it can be devastating. So I think that there's a balance that, we should seek between the extreme of never using a stop loss and the extreme of always sticking a stop loss right on every time you enter a trade. That there could be a balance that you could do a little of both, and do it wisely, whatever works best.
Yeah, I think having a final point where you go, like, that is, ultimately, yeah. I mean, the other thing is, and I'm just getting more and more on this, which is a bit like having said that, I didn't even look, now we went into that Euro trade, but, not basically trading, going for the 3 or the C, in Elliott wave terminology. Trading those waves means that, you should be able to put a stop loss in, and basically be comfortable that if it goes past there, it invalidates it. And all of my losses, I think, without question, when I've essentially traded the end of a 5, and I've been trading the A wave, and just that's where it goes wrong. And we just know that a trend the 5 can become a 7, a 9, and you sit there waiting for it to kind of to go, and that's where basically the losses that hurt have come. And I look back and I'm like, what was I doing? Why didn't I just now trading the 5 of a C is a whole different ballgame, because on a bigger time frame we go, okay, well, I know I'm in a correction, and ultimately that is the place I've got a place where I know it ultimately is the invalidation point. But trading the end of a trend, they've got no place to go, so yeah, I try to again, just stick in that in that kind of roadmap approach.
I think that the same problem that I mentioned I've had, And it's that there are many times when you get in at the end of the trend, you nail it perfectly and you get a bunch of profit, and then that reinforces the idea that, yeah, I should always do that. And then the next time you try it and then it doesn't work out, and then you try it 2 or 3 times, it doesn't work out. And, you know, I mentioned that I can't see making a rule. And then, but if you could further define that, you know, in this situation, I might do it, but in this situation, I wouldn't, then it's very difficult. Most people kind of require just to have a black and white, always do it, never do it.
Yeah, I mean, obviously, like, you know, if you're trading a daily trend and you're kind of looking for the end of a trend on the 4 hour, or the end of a C wave on the 4 hour, or the 5 of C on the 4 hour, and, you know, in some respects you're trading the end of a trend, but it's a correction on a bigger time frame. So, you know, is that a correction you're trading, or the end of a trend? You know, I mean, ultimately it's a correction, obviously, because we're on a risk reward basis. But I think what happens is that we don't approach it with a risk reward approach. You know, we go, right, well, I'm going to get in with this size position, and there's no way you could hold that to, you know, to basically for the correction ultimately to, you know, if you get it wrong and basically that C trend runs a bit further, yeah, it's too big. And you kind of go, well, actually, I was right. It was a correction. It's just a correction that's just like looked different. It went differently than I thought. It's like one of those funny corrections. Yeah, like all corrections are funny. That's the whole thing, you know. And that's what I've realized is that they're all funny. And the problem comes where you kind of trade that end of a correction with a position size that goes, well, if it is funny, I'm kind of stuffed because I can't hold it, you know. So then you've got to go, right, well, basically, got to have a stop, you know. But I think one of the challenges with, you know, sometimes trading the end of a trend and sometimes trading the end of a correction is that, are we really focusing our skills to get honed in one particular area where we just know it? So, you know, we're so good at, I mean, you've got to be good at both, because obviously we're getting into the trend and we want to exit that. But, you know, really we want to be absolutely skilled at entering at the end of a correction, exiting at the end of a trend, and not confuse our minds with, well, now I'm gonna sort of like do something different, you know. And I think just I still think that there's a lot more we can do to get that entering at the end of a correction right. And, you know, that I've been looking to do that with stochastics and all of that, you know, and in a way moving to TraderView has stopped that a little bit, because I found it easier on MetaTrader and I can't even get the stochastics look exactly right on TraderView, which is annoying. But I think there is definitely something in that, you know. And I think that's where, for me personally, you know, I just want to hone the finding those end of corrections even better, or maybe just de-risking the entries a little bit. And that's kind of what I'm doing, is going, right, well, it could be the end of a correction, but you know what, there's a few red flags here that that's it, I'm not going to take them, I'm going to wait.
It does seem to be that when it gets really down to it, with all of the kind of skill that we've developed, is it comes down to having a certain requirement for a selectivity, you know, like the selectivity. You could just get into things all the time that are marginal, but if you just choose not to and only get in when everything is lined up, that also kind of goes against human nature.
Yeah, and you know, I was, you know, just I don't have, well, risk reward ratio when when you're not using stop losses, the whole risk reward thing becomes a bit tricky to monitor, because ultimately you didn't really set your risk to then measure your reward against, you know. So I think, but I still think it's important, you know, when you look at those kind of win-loss ratios, risk reward ratios, and you do the maths and the exponential, you know, accumulation, obviously compounded up, it's huge. And, you know, just, I mean, you know, in terms of like, you know, my goal for trading, you know, per month is, you know, 5 to 10% account increase. Nothing too crazy. I'd be happy with 5%. I mean, 5% once you compound that up is big. And obviously 10 just takes it very big, once you sort of like start propagating that over months and months and years. But you don't need to do that many trades. I mean, basically I kind of came down to the conclusion that really like 12 trades a month, 3 trades a week is it's totally sufficient to go, right, well, if I was having a 65% win-loss ratio, which again is not too aggressive, and that's easily achievable for us. That's 2 out of 3. And a risk-reward ratio of 2 to 1, which again is not huge. And given that we are essentially trading a trend rather than, against the correction, that's completely achievable. 12 trades a month will, at a very low account risk, 1% per trade, will essentially deliver you that 5%.
Yeah.
We're not looking for 10 trades a week. We're looking for 3 trades a week.
Yeah.
And that's what we've been doing.
I feel like I'm trading 2 or 3 trades a week, and then I look in my account and say, 23 trades in 1 week? What was that? What was that about?
Yeah, you remember the good ones.
But I think it was okay, there's 2 or 3 entries all at once here, and there's 2 or 3 all at once here.
I think, diversifying the trades into, like saying like, well, I'm trading the pound, but I'm going to be in the pound Swiss and the euro pound and the pound US dollar. Well, that's not really 3 trades. It's 1 trade spread into 3.
Kind of an illusion that, a lot of us as traders have this illusion. We just get into everything. But if you do that, you're totally abusing your own risk management. Most likely. Most of us are doing that.
Yeah. And one of the things I've started doing, I think it's been really helpful, is if I'm going like on the dollar, for example, if I'm going long, these are the pairs I'm trading. If I'm going short, these are the ones. So, I will, and I've, so for a long time, this is not necessarily applying now, obviously, but like, a few weeks ago, I'm like, and I think I was saying on the webinar, I'm like, if I'm going long, I'm going long on the Kiwi dollar, gold, and short on the US dollar CAD. They were my kind of short US dollar trades. So, and that was one direction. If it was going the other way, then it will be X, Y, Z. So, obviously, generally, I'm really just got one direction because I'm kind of feeling that that's where it's going to go. But I know then that when it moves, I'm just going to click those 3 trades. I'm not going to get sucked into, I'm going to go long on the euro suddenly, because the euro is what the chart I'm looking at it and I see it move and I go, I'll get in the euro. It's like, I don't need to. I'm just going to go in if it's a US dollar move, I'm going in the Kiwi because I feel comfortable that long term, that's where it's going. And I've got that long term, roadmap in my head, and I've done all the analysis that supports that. And and what happens is then when it moves, like when that US dollar CAD went down, it didn't pull back. You don't have it's a stress-free trade. You've just got that extra strength behind you. So, because there's nothing worse than getting in a trade and going like, oh, all the other pairs have gone, and the one I chose didn't,
Yeah.
And you're like, what was that all about? Oh, maybe it'll catch up. Well, maybe it won't catch up. Maybe the others will come to a stop and yours just won't go anywhere. And so I'm picking the right pairs to be in based on the move. And you can do that on all kind of currencies, obviously. And then I'm going into the week going, okay, well, basically there's 6 trades that I'm looking at. And that's it. And then at least you got them right. I'm not going to get distracted from these 6. Those are the 6. And I'm waiting, obviously, for the conditions to be right. And so, I shouldn't get into 20 trades because I've only got 6 pairs I'm actually allowing myself to trade for the week.
Taking into consideration the patterns that you're seeing, and then the relative strength of each of the currencies, and then what you may already know from experience that certain certain pairs behave better than others, and so put all that together, and then the news coming out for that week, then you end up choosing, if I was going to go short at this time on one of these pairs, it would probably be this one. And then
I think, it was when we were looking at, I mean, definitely looking at obviously the news. I think, one can look at the news and go, right, well, that instantly just goes, there's only 3 currencies that are going to really move this week. So let's start there. And then if I want to get into the Kiwi, which, let's say I want to go long on the Kiwi, which is the weakest currency that I can trade it against, and that will stay weak. And that, in a way, might be a currency there's not any news on. So I think when those dollar moves were happening, well, there wasn't any gold news, for example,
yeah.
But it was just like, well, gold just looks like it's in a solid, uptrend. So if the dollar's going to go down, I'm just going to have a position in gold. And they performed beautifully. And the same with the Kiwi. We had a view that the Kiwi dollar had made a daily turn, and I think it made a correction as well at the time. And I was like, that just looks, I'm confident that it's going up longer term at the time, So when I'm going short the dollar, that's my choice. And I think that's bringing a lot of the trading skills and experience that we have, with the daily roadmap and just being selective.
Yeah, as it seems like years go by, you keep having new levels of things that you weren't aware of before. And even this year, I think I've had some aha experiences with things like suddenly just realized one day silver against all these other currencies. And there's this really clear pattern. It was formed by silver. And then that just got me noticing something I never really even noticed before, because I never looked at those too much. But now I see that you can really learn a lot from looking at gold and silver against other currencies, not just against the dollar.
I'm definitely going to get, I'm planning to tackle, really this, as I say, this, I'm now we're in a period where I'm focusing on trading as being a profession, if you like, this year. And, that's something that my wife and I have discussed, because she's actually going to get, a job, because we still need some income. But in doing so, I'm going to adopt a more rigorous approach, which along the lines of keeping the number of trades down, and in doing so, that means just going, okay, well, which are the ones that I will be going long or short on, as and when those moves happen, and so that I don't end up going into random trades. The random trade thing can just really distract you.
Oh yeah.
So you just end up with suddenly you're running a little loss on a random trade, and it takes your mind off the positive trade. Forget the little loss that you end up taking. It's the fact that you missed the bigger trade because you're just frustrated and focusing on the chart, going, oh, I need to get out of that. When should I get out of that? And then you you've moved your whole focus away from where it should be, which is just right from the beginning of the week going these are the 5 trades, and just almost just getting completely into the flow of those pairs, and thereby simplifying the job a little bit. Because as you say, I got about 30 charts on my platform that I could look at. So am I really going to be able to look at all 30 every day and, get into the right trade? Or can I not just for the week just eliminate, I still might look at a number of charts because obviously I want to be looking at the correlated pairs, but, the fact is like last week, we knew it was going to be an Aussie Kiwi week, because it was just all Aussie Kiwi news.
Oh yeah. Yeah. Kind of had the pairs already planned in advance and the trades already planned in advance. Just waiting for the time.
And I just think, that's where trading just gets really, profitable. I think is just if we just get in those 3 trades a week, and we can even get one of them wrong.
Yeah,
doesn't matter. But that's what we do every week. We just go, right, these are the trades, and to a certain extent, we're staking the claim at the beginning of the week. So this is where our profit will come from. And if it comes from somewhere else, so be it, But the chances are, even that decision-making process will probably be 80-90% accurate, just because you're looking at the news calendar and going, right, well, I can see there's Aussie Kiwi news, so I'm just going to stick with that, and then we just focus in on those, and then it's just about getting the feeling comfortable with obviously the charts, and then the entry. And really, if one removes the timing aspect of it, because we're confident with the direction of it, if you get in a bit early, it doesn't matter. It's not a losing trade. You just got in a bit in early, and you're not going to make quite as much money as you thought, and that's it.
Yeah, it's been like on a roll lately, but
yeah, I mean, frustrating being not frustrating when I use that word, but it's like, not being in the Aussie Kiwi time zone is just, I mean, I tried that Aussie, I stayed up to 12:30 for the, what was it? The Aussie, whatever it was. And
that's going to be the one challenge when you're in the UK.
Yeah. Like it went against me by 30 pips. I was like, okay, I'll just exit it. And then there was the 3:30 a.m. cash news. And sure enough, I was like, well, I'm not going to have another go at it, But if I'd have been, I would have just stayed awake and watched it. But I thought, I can't go to sleep and just leave it, And then sure enough, boom, came all the way back. I was like, okay, that's a classic, like directionally correct. And timing just 3 hours too early. It was a news entry timing thing, So it is tricky when you can't be up for it.
But it seems like you've been right on a roll yourself, just one after another in the flow, one trade after another, making the right decisions over and over.
Yeah, I feel like I'm definitely on a good roll, and I feel like I'm definitely on a consistent, understanding of things, and I'm constantly having to remove the bad trades, obviously, or the sort of, but they're fewer and far between now, So yeah, I think the analysis that we do it's great, and you still have to convert that into profit, by obviously being able to enter into the trade and entering in correctly, etc., etc. But I feel in terms of our analysis that we are really, really getting quite spot on.
I'm making fewer mistakes myself, even though I don't know if you've ever experienced that you consciously or intellectually know what you should do, but then something causes you to question or to not do it. I think that's a normal thing, but I've been doing a lot of work on myself, because I've been working on personal development for a long time. In the last year, I started to discover what's the core issue in my subconscious that's blocking. And then once you discover that, you can work on reprogramming it. So I listen to these self-hypnosis things that put the opposite belief. Like if you believe that, I'm not worthy, or I'm self-worth kind of things that were programmed when you were a child, and you put the opposite belief in there and you program it over and over daily and day after day. It starts to change things until you have your unconscious mind assisting you to avoid mistakes.
Yeah, and it's one thing um, I I remember from my childhood. My parents were both in education, so we had a lot of holiday, but not massive amount of funds. We'd go on like camping trips, sort of like to France, driving through. We had months off,
Summers
but
off.
yeah, like summers off. Like the whole 6 weeks for the summer, and we would go camping in France. And rather than going on a flight and a week's hotel somewhere, we drive off to go camping in France. But I do remember, my parents talking about money, in the car, and always like, moving money from one account to the other. And it's funny because I do think that there's basically, I've inherited some definite financial blocks, as a result of that. And, not that they really were ever hard up or anything, but money was never abundant, So absolutely, whilst I try and basically ignore all of that and make sure it's not there, I've got to accept that it's basically been programmed into me, and I haven't really done any, proper work to remove that. And that is something I need to do to help accelerate the trading. Yeah, no, I think that's definitely something which I need to add in, and I think I guess that's where trading ends up, right? I mean, it's you kind of get skilled, and then you realize that it's just the start of the journey, and really you've picked a sport where there's a hell of a lot of money to be made, but just like anything, you've got to be ready to receive it, and you got to do the work to allow that to come in. And you could have picked going into, consultancy or, whatever, business. But, ultimately you have to allow success to happen. And, for us, it's really binary, and it's kind of like, that's what I love about trading as well, is it's so, there's nowhere to go other than to yourself. You can't blame anyone. It's like you can't make any excuses, and so it forces you to confront those things head on. I think in a way that many people would never do, because it's just like, oh, that business deal didn't go right. It was so and so let me down, and that's not my. It's like with us, we've got no option than to go. Okay, we know where the blocks are. They're in us. So I think I like that about trading, is it's given me a much greater appreciation of my own limits. And yeah, I think that's been, but also, and also just, and where the path to success ultimately lies,
Yeah. I could blame Theresa May or Trump or something.
Yeah.
Probably not their fault.
All those Trump triangles. It's all his fault that we're kind of in this consolidation phase and not making money. I mean, so I love trading for that, and I think people, and I love the trading community as well. And I'm going to have to dash, Scott, but I also wanted to say thank you as well for being such an amazing mentor. I think so many people owe so much to you for just guiding them through this journey, and guiding them through not just the learning how to trade bit, but then kind of
now I feel like I'm learning from you every day, so I just always need that second opinion nowadays, so it's good working together.
Yeah, no, it's great. I'm really enjoying it, and I had a lot of time where I've not been able to be kind of like on the platform, as you know, like last year and stuff. So it's like I'm here, and I'm looking forward to a great 2019.
Oh yeah,